The robotics boom is happening right now, but most investors are just piling to the same 2 or 3 stocks. But here's the thing, some of those compelling opportunities in this space aren't the obvious picks. That's why today I'm breaking down 4 stocks that are quietly positioned to benefit greatly from the robotics revolution. They include companies making everything from the chips that make robots think, to the equipment that builds those chips, to the industrial machinery that's already automating the world around us. 3 of the stocks are flying almost completely under the radar, but the last pick is perhaps the most exciting. A well-known name you might not have thought of is robotics plays, so stick around for that. By the way, I'm Steve Reitmeister, but all my friends call me Righty. I spent nearly 20 years as editor-in-chief of Zacks.com, and today I'm a partner of WallStreetZen, where I help develop a quant rating system to simplify fundamentals research for stock investors. Quick favor before I dig in, if you like data-driven stock picks like this, then please hit that like button. It tells YouTube to send you more quality videos and less AI slop. And speaking of which, no, I'm not AI generated. I'm a real person. Just ask my wife. Okay, one final disclaimer. This is for educational purposes only, not personalized investment advice. So always do your own due diligence before investing. The title of the video suggests that these stocks are right up there with Nvidia. So let me tell you how they've earned that spot. All right, my starting filter was our quant system. I'm talking about the Zen Ratings, which analyzes every stock across 115 fundamental factors and boils it down to a grade from A to F. The best stocks, of course, earn the A rating, equivalent to a strong buy recommendation, whereas the Fs are strong sells. As of the week I record, Nvidia is indeed an A-rated stock as it scores in the top 3% of all 4,600 stocks we track in the system. That's excellent, but all 4 names I'm talking about today rank even higher than Nvidia in the system. So truly elite fundamental profiles that have historically pointed to superior share price performance. So let's dig in deeper with those 4 special stocks. We are going to start off with Amtech Systems with a symbol of ASYS. Every robot that thinks, sees, or moves has to run on semiconductors. And to make those chips, you have to start with a raw silicon wafer that has to be heat treated and cleaned with incredible precision. Amtech makes the thermal processing and surface preparation equipment that sits at the very front of the chip making process. It's about as foundational as it gets. And the business is truly firing on all cylinders, as can be seen by the expected 80% earnings growth this year over last. To put that into perspective, that's running about 3 times the pace of the rest of the peers in the semiconductor equipment space. That's the kind of growth curve you want to catch early. Like I said before, another chip giant, Nvidia, is in the top 3% of all stocks according to the Zen Ratings model. Amtech is even more impressive by scoring the top 1% because of a truly special fundamental profile. Each overall Zen rating is built on 7 component grades that reveal a stock's specific areas of strength and weakness. Now, with Amtech, there are 4 areas where it truly excels. Now, financials lands in the top 13% of all stocks, showing that they are a finely tuned operation. Next up, we have a top 4% showing for growth, which is the best predictor of more earnings beats ahead. Momentum is in the top 3%, saying that investors are already bidding up shares, and I've saved the best for last. Amtech scores in the top 1% for sentiment, which tells you the smart money is very tuned into the stock, usually a pretty good idea to follow their lead. Now, it isn't flawless. I should mention the risk here. This is a small company, and price action is going to be a bit bumpier, right? This shows up in their lower safety rating, which is going to be pretty typical for a lot of the under-radar stocks that we discussed today. But for investors who want the true early-stage exposure to the layer underneath the entire robotics build-out, well, Amtech has a lot going for it. It's profitable, it's growing fast, and it's leading its industry on the fundamentals that count. This is definitely a stock to put on your radar screen right now. Speaking of things that should be on your radar, I run a free live training session every Monday at 7 p.m. Eastern Time. It combines timely market insights and top stock recommendations in real time. Sign up now for the next one this coming Monday at WallStreetZen.com/live. Now it's time to turn to the next step in building a chip that is part of the robotics chain. I'm talking about Kulicke and Soffa with a symbol of KLIC. The company picks up where the last one left off, right? That being where a chip is made, it has to be connected to the outside world and sealed into its final package. Kulicke builds the wire bonding machines that attach the hair-thin wires, linking the chip to the device around it. They also build the advanced packaging systems that stack and join chips into a single high-performance unit. And as chips for AI and robotics get more complex, the packaging step is becoming one of the most important and most valuable parts of the whole process. That growth story is generally impressive. According to the Street, expectations Kulicke's earnings are forecast to grow nearly 100% in the coming year. That is more than 4 times the industry average. There's a good reason to believe they will actually achieve that growth because they are riding a hot streak of 4 straight earnings beats. Now, the Zen Ratings is picking up on this earnings momentum as well. That's because we have another stock with an elite A rating. Across the full 115 factor review, they rank in the top 2% of all stocks in the model. Looking at the component grades, there are several areas of strength, starting with sentiment. The top 18% all stocks. Even better is the top 3% showing for growth. This is based on the consistency of past growth, which foreshadows more growth ahead. And rounding out those component grades is the top 1% showing for momentum. As Isaac Newton famously said, a body in motion stays in motion, right? The risk here is that chip equipment world is cyclical. Demand can cool quickly, and a stock price for strong growth has a lot further to fall if that growth slips. So if you buy this one, you have to be watching the earnings estimates closely, because when they slip, you have to run for the exits. Now, putting it all together, Kulicke provides a great behind-the-scenes way to play the explosion in complex AI and robotics chips. Proof of that shows up in their exciting growth expectations and special fundamental profile according to the Zen Ratings. These things greatly increase the odds of outperformance going forward. Before I get to that next stock, if you're getting value out of this video, then please hit that subscribe button and the notification bell. Now, I put out this kind of data-driven research quite often, and subscribing means you won't miss the next one. Let's move from the chips themselves to the thing that keeps every automated factory on the planet running. This brings us to the third stock today in Generac with the symbol GNRC. Now, if you're familiar with this name, then you probably know it as the backup generator company, and certainly that's where they made their name. But here's what most investors are missing. Generac has been pushing aggressively into energy storage and grid automation. That matters enormously for robotics, because automated factories and warehouses full of robots cannot afford to lose power, not for a single second. The reliable, intelligent power infrastructure that keeps all the automation running is exactly the direction Generac is moving, and it's moving there fast. Currently, Wall Street expectations call for 60% year-over-year earnings growth. Thus, no wonder that the professional analyst community is so firmly bullish on these shares. Of the 14 analysts tracked on WallStreetZen.com, the stock enjoyed a consensus strong buy recommendation, and most certainly our quant model agrees. Generac also earns an elite Zen rating of A. That's because the 115-factor review puts in the top 2% of all stocks tracked. It's backed by generally impressive component grades across the board, right? We're talking about safety and financial health, both ranking in the top 12% all stocks. Then we have momentum right behind that in the top 9% of all stocks, and best of all is the growth grade in the top 2%. Again, the benefit of the growth grade is how it greatly increases the odds of more earnings beats ahead. Now it's time to talk about the risks. Generac's earnings have been a bit uneven quarter to quarter, and a chunk of its legacy business still depends on storms and power outages, which are highly unpredictable. So there may be some bumps in the road with owning the stock. The company is quietly building the power backbone the automated world depends on. Now, add on top the strong Wall Street support and stellar Zen Ratings profile, and you start to understand why I think Generac is a generally compelling pick. Now, before I get to that final stock, I need to tell you something. You would already be up to speed on the next stock if you were a regular attendee at my weekly live training sessions. The point is that if you want to know about great stocks sooner, and it's a good idea to join me live every Monday at 7 p.m. Eastern Time. That's when I share my updated market outlook, investment plan to outperform, and my trade of the week, combining the best of the Zen Ratings with my greater than 40 years of investing experience. This is a free event, but you do need to register. So just go to WallStreetZen.com/live or click the link in the description or scan the QR code on your screen. I look forward to seeing you there on Monday. Okay, let's finish strong with Micron Technology, the symbol of NU. Now, we all know this one, right? That the headlines have been buzzing a lot about it recently, so you likely already know the name, but maybe not as a robotics play. Here's the connection. AI-powered robots have to process enormous amounts of information in real time, seeing, decoding, and acting all at once, and that takes a very specialized kind of high bandwidth memory. Now, Micron is just one of a handful of companies on the planet that can make those kind of high bandwidth memory chips. And as physical AI scales up, demand for exactly the chips Micron specializes in are set to climb right along with it. And the growth story here is truly remarkable. The latest earnings report showed 4-fold increase in revenue and 13-fold increase in profit. The results are mind-blowing. Even more impressive is that management said that demand is still so strong that they have to ratchet up expectations once again for the quarter ahead. This immediately sent shares 15% higher on the news. Wall Street has absolutely taken notice. Micron has deep analyst coverage with a consensus strong buy recommendation. Even better is how there's a parade of freshly raised target prices calling for even more upside ahead for these shares. You can see all this analyst coverage for Micron or any stock on the quote pages at WallStreetZen.com. That is also where to say the daily updated Zen Ratings. So be sure to bookmark the site for frequent future visits. As you are expected, the Zen Rating shines upon Micron. The stock earns an overall Zen rating of A, and in this case, we are talking about being the top 1% of all stocks. It's also the #1 name in the highly competitive semiconductor space. As you would expect, the components grades are similarly strong, starting with financials in the top 17% of all stocks. Then we have value ranking the top 13%. Now, this might be the biggest surprise given how shares have rallied so much in the last year, but it tells you that growth has even been more impressive and the shares are still undervalued. Coming down the home stretch, we have a top 10% showing for momentum and top 1% for sentiment. This is truly a well-rounded and special fundamental profile, but I always show you the full picture, so I should clarify that Micron has been pretty volatile, with which is quite common for semiconductor stocks. But here's the bottom line. You've got a company that makes an irreplaceable component for AI and robotics with explosive growth, the #1 semiconductor rank in our entire system, and Wall Street's best analysts firmly behind these shares. This is the kind of earnings momentum story that it pays to ride, especially as the earnings beats continue and especially as it's still undervalued relative to all that amazing growth. So there you have it. 4 different ways to play the robotics boom, and even the famous stock amongst them in Micron is somewhat under the radar in the robotics world. Now I want to hear from you. Which of these 4 stocks do you think is the most promising? And are there any robotics names you got your eye on that I didn't cover here today? So let me know down in the comment section below. And lastly, don't forget to sign up for that live training session this coming Monday. If you want to stay on top of what's next for the market, then I got a suggestion for you. In the video that's popping up on your screen, I talk about why I believe the smart money is rotating away from the Mag 7. So where's that money going instead? Well, you got to watch to find out.